Good afternoon, ladies and gentlemen. I have good news for you. I have no slides. So just take a few minutes and share some convictions around these payments area, the impact on the banks, and I will try to explain you why I named this short presentation The Dawn of Smart Commerce. I think you will understand quickly. Within EY, I'm in charge of helping our financial services institutions and clients to adapt to the new customer behaviors, to grow their revenues with taking account that customers are changing in the way they buy, in the way they pay, in the way they interact with their bank too. So we are listening to many customers throughout the world, and we have surveys that have helped us to build our convictions. It's built on listening to customers. By the way, if you are interested to what customers are saying about payments, about their relation with the bank, or their new behaviors when they want to buy a mobile phone contract, you can go to our website. We have just published a new tool. You can select the country you want to look at, even if it is France, Italy, Germany, even if it is India, South America. You go to the country, you say, which type of customers would you like to look at? All, or just the young ones, or the oldest ones? The man, the woman? You select which product you are interested in, clothes, how they buy clothes, how they buy cars, how they buy mobile contracts, how they buy consumer loans. And you get the answer to a few key questions around their behaviors between shopping, online, payments, and so on. Okay? You will see that. This is very useful to understand how it moves. And it helped us, as I said, to develop a few convictions that I would like to share with you today. The first one is, there is, maybe evident, but I'm not so sure for everyone, there is a big difference between emerging markets and mature markets. And this difference is not what we think prime about, they are less developed and so on. No, and it's not true about technology. They are very clever with the new technologies. Sometimes they are much more happy to adopt them. I'm working with Turkey, I'm working with Middle East, I'm working with different countries where I can tell you the mobile technologies are welcome and easy to implement, easier probably, less resistance. No, the big difference is somewhere else. The big difference is that in buying and in payments area, the difference is on the value that you can add to the customer, that you can bring to the customer by mobile payments. That's the reason why M-Pesa, for example, in Africa, I was working also with them there. That's the reason why they have a great success, for example, because the value for the customer is totally real. It's not a concept, it's not about marketing, it's real value, because they have no other way to access, maybe, sometimes, money. For example, the fact that when you go in a small shop in a village in Africa, you don't find a point of sales terminal, of course, for accepting American Express, for sure not. Okay? So the mobile is a real way to access, because the cash is not easy to access when you have no ATMs in the villages also, and even no branches. So I insist on that just because I think we forget too often to stay in the shoes of the customer, the final customer, and look at the value for him. Okay? So this is an important difference, and if you go to Nigeria at the moment, where there is a big economic boom, I was there a few months ago, discussing about the mobile payments issues and so on, it will grow much faster than here in Europe. Again, why? Because the government decided to move to a cashless society. And the government of Nigeria decided to put a tax on every cash withdrawal from ATMs or from banks, okay, above a minimum of vital for every week living. which means that, of course, mobile payments is booming. Okay? So it's a question of behaviors, it's a question of value added to the customers, and when you hear to the Vodafone CEO, who a few months ago was saying, I'm very disappointed about digital payments, okay? You can understand that effectively Vodafone is part of EMEIA, by the way, project and so on. So they see the value in the emerging markets, but they don't success in transposing that in our major markets yet. You will maybe find me very negative because we have a lot of demonstrations in this conference that many solutions exist. And I agree with that. Many solutions, maybe too many, by the way, to find some standard somewhere. But many solutions exist, for sure. It works, okay? It's not the question. The question is, why should I use it in a major market? Why should I use it when on Saturday night at 3 a.m., when I am in a nightclub underground, I can use my credit card or debit card very easily to pay without problems of capturing a signal with my mobile phone or having my battery down, okay? No reason, because where is the real value? And when you think about that, you understand quickly why I'm speaking about the down of e-commerce, of smart commerce. I think it is going to move now, but it is totally normal, to my view, that it didn't move earlier. And the reason it will move is not because of payments are easier with mobiles. It's because the commerce, the buying act from the customer will, by the way, include the payments as an end step, as a commodity. Because it will become more easy to pay through the last click on the mobile after doing all the commercial act through the mobile, rather than taking out my card and saying, oh, by the way, you granted me with a voucher. I need the code of the voucher to type somewhere. Oh, here is my loyalty card. I would like to get the points of my payments on my card and so on. If you have packaged that in a real smart commerce approach with your customer, then the payment will come from the mobile to me for sure. Okay? That's why I think the things are moving, because our surveys, as I mentioned at the beginning, show that the smart commerce is booming itself, okay? It starts, just the start, but it is booming because there is value also on it. And the value, once again, is maybe not through the payment act itself, but it is through the fact that I receive the right voucher at the right time when I am close to the shop I wanted to go. When you see that the new customer is combining the shop and the mobile sessions together, it's now combined. It's not one or the other. It's really combined. And so when you understand that, the next question is, well, if it really comes, what's the impact, especially for the banks and the payments business area? The impact is that there are a few options. Either you can say that disintermediation could happen with new players coming and saying, I am the payment service provider, the PSP, okay? I don't need any bank. Or there could be an attitude from banks to say, okay, let's accept that we will decrease our revenues to stay on board with the payments area, and so there is a big impact, financial impact there. Or third attitude is to say, let's handle this smart commerce approach. It's also for banks to take their role there. And we have asked this question to many banks, and we have published one more of this survey because we love to listen to our clients. And I can tell you the answer to this question. 62% of the banks we interviewed said the smart commerce approach to stay on board of payments is not an option, is not something we should follow. It's something we should even lead if we can. Okay? So 62% explain us that they plan to have a strategic approach to the new era of payments through the full smart commerce approach rather than just through the Payment Act itself. And the consequences you can understand easily. First, if you are really a player, even a leader in the Payment Act, you get not only the payment amounts and transaction, but you can also maybe get the payment data ticket, the cashier ticket. So you know much more about the customer. What did he buy, when, who is he, and so on, okay? So next step is a win for everyone. A win for the customer, because then, thanks to the smart commerce integrated approach, he gets value, he has real service, okay? Second, for the bank itself, because it stays on track with the payment business, and more than that, they get more data about their customers, and they can go further in their customer knowledge. And third, for the retailers, because what we will see, and I say that for a few months now, but I can tell you that it happened a few weeks ago already with one bank I've seen in the world who has started that. The banks will move to new services. Instead of saying, I'm losing my revenue and I have to reduce my commissions and so on, and I'm in the corner, okay? You can take the game from the bank side and say, okay, let's reinvent the new services I can propose to some mid-sized retailers, for example, who have not analytics power at all. Okay, they don't have their computers as the big retailers who, like Amazon or everyone, in this class. So the mid-retailers have not a lot of information about their customers. Okay, you can then build new services, and then the retailer who is paying, instead of paying commissions, who is paying value-added services, will be more happy too. I think there is a win-win-win, a triple win game between customer, bank, retailers, if we take the smart commerce approach in a real integrated way. It will take still some time. It's only the dawn of smart commerce. But this is our conviction, and I thank you for your attention.